Hi everyone, I am Ankur, co-founder and CEO of Belong, and welcome to Offshore Advantage, where we discuss everything related to NRI investments in India and abroad. Today we will talk about how NRIs can invest in mutual funds via Gift City. Just a brief recap about Gift City. It stands for Gujarat International Finance Tech City. It is India's international financial services center, much like DIFC in Dubai. Its main advantage is that it is considered offshore under FEMA, and it provides attractive investment opportunities for NRIs. Before we deep dive into what are these different types of inbound mutual funds, let's take a step back and ask that as NRIs, why should we even consider investing in India? So there are two reasons. One is, participating in India's growth story. India today is the fastest growing major economy in the world. And apart from US, India is probably the biggest growth story out there. The second is diversification, right? So for NRIs who are invested, let's say in real estate or in US markets or some other markets, it is always good to diversify your investments across geographies. Right? There have been decades in which India has outpaced the US. Even in dollar terms, in terms of its growth. And there have been obviously decades where in India's returns have been at par or slightly behind. But the biggest reason is that we never know what the next decade is going to look like. So it's always good to diversify your investments across the major economies of the world, and US and India being two of them. Now let's talk about the inbound mutual funds, which is the topic for today's discussion. So as I said, there are two distinct types of inbound mutual funds which vary in their taxation. So there are funds that directly invest in Indian stocks, and there are feeder funds or funds of funds that invest in Indian mutual funds and thereby indirectly investing in Indian stocks. Now the taxation for them varies quite a bit. So the first thing to understand is that in all funds based in Gift City, the taxation is only at the fund level for the funds trading activities. Right? There is no tax at the investor level when they are buying or selling the units of the fund. So when they're investing or redeeming from the fund, there is no tax at all. But any tax is levied only at the fund level when the fund itself is buying or selling stocks. So that is one of the biggest things to understand when it comes to funds that are situated in Gift City. Now, between the two funds, if the fund invests directly in Indian stocks, then on their trading activities, the taxation is roughly the same as you would get as an individual. That is LTCG of 12.5%, STCG of 20%. So no tax advantage there. But if the fund is a feeder fund or a fund of fund that invests into a mutual fund in India or an ETF in India, then the government has given a complete tax exemption. So there is no tax on the fund level. And as we already discussed, there's no tax at investor level anyway. Right. So if you are an NRI or an OCI or a foreign national and you are investing in India through a Gift City based fund, right, which is a feeder fund or fund of fund structure, then there is no capital gains tax that is applicable to you from the India side, right? There may still be some tax that your home country or country of residence applies. But on the India side, there is no taxation at all for you. Now, if your home country or your country of residence is a country like UAE or Singapore, where there are no capital gains tax, then you don't have any capital gains tax in India, and nor do you have any capital gains tax to be paid in your home country. So net, your entire investment in India through Gift City becomes tax-free. So again, reiterating, this tax exemption is only for inbound mutual funds that are set up as a feeder fund or a fund of fund structure. Now, on top of this, as I said, there's no capital gains tax. It also means that there will not be any TDS when you redeem from these funds, you will get your entire amount back, and there is no requirement of any Indian ITR filing as well. So that should come as a big relief to a lot of NRIs, right? Because even when there are DTA benefits provided to certain jurisdictions, that first goes through a TDS cycle, and then you have to file ITR to claim it back, and that can take any amount of time, and also it's expensive to get a tax residency certificate and all of that, right? So here through Gift City, you get that entire, you can sidestep that entire hassle, and have your investments in India completely tax free. So that is one of the reasons of the popularity of such feeder funds or fund of funds being set up in Gift City. Till now, most of such funds were large ticket AIFs, which had a minimum ticket size of 150,000 USDs. But now, starting this year, the same tax exemption was extended to retail mutual funds also, and now we have recently the first retail fund that was launched in Gift City. So we'll cover that in more detail now. But yeah, in the coming few months now, because of this tax exemption, there are many more mutual fund companies that are planning their inbound mutual funds through Gift City under this structure. So as I said, the first such inbound mutual fund for NRIs and OCIs and foreign nationals with complete tax exemption was launched recently in Gift City by Tata AMC. So the fund is called Tata India Dynamic Equity Fund. We'll talk a little bit about that fund, where it invests, what the features are, who is eligible, what are the fees, etc. And we'll go into a bit of detail, and also tell you how you can invest in this fund and take advantage of the India growth story without having to pay any taxes. So Tata India Dynamic Equity Fund, as I said, because it is set up as a fund of funds in order to take advantage of the tax exemption, it invests into mutual fund schemes of Tata AMC based in India. So Tata India Dynamic Equity Fund is investing into several Tata mutual fund schemes in order to give a diversified basket of investments to the end customer, while also taking advantage of the tax benefit. The broad allocation or investment strategy is that there will be a core portfolio of about 50 to 75%, which will invest in large cap or mid cap or flexi cap, and then there is a satellite investment strategy of about 25 and can go up to 50%, where the investment where the fund manager will take sectoral or thematic bets wherever they feel that they can get returns in the short term. Right, so that's the core satellite strategy the fund is following. Now, as I said earlier, earlier Gift City mostly had AIFs with a minimum ticket size of 150k USD. But yeah, this is a retail fund, and here the minimum investment is just $500. In terms of who is eligible to invest, so NRIs, OCIs, and foreign investors can invest in it. Indian residents cannot invest in this fund. US, Canada NRIs also unfortunately cannot invest in this fund. And also, if you're a resident of a FATF gray or blacklisted country, then again, you are not allowed to invest in this fund. So it is open to non-residents from countries apart from US, Canada, and gray and blacklisted countries. Coming to the expense ratio, so again, as it is a fund of funds, you have an expense ratio that is charged at the Gift City fund level, the feeder fund level, as well as an expense ratio that the Indian mutual fund where this fund is investing will charge. Now both put together, the Tata management has put a cap on what can be the maximum fees, both these fees combined. So that is what they have published in their prospectus. So for the direct route, the maximum expense ratio of every all in both all funds put together, the feeder as well as the underlying, for direct fund, it will not exceed 1.75%. It can be less than that depending on what the current allocation is, but it will not exceed 1.75%. And for the regular fund route, it will not exceed 2.5%. Now, after that, there are no entry or exit loads in the fund. So, even if you exit from this fund, there's no lock-in. If you want to exit from this fund in, let's say, 6 months for whatever reason, although not advisable, but let's say there is some need and you want to switch out of this fund, there will not be any exit load. And as we discussed, there's no TDS or capital gains tax anyway. So just recapping, the tax benefits of Tata India Dynamic Equity Fund is zero capital gains tax for non-resident investors, no Indian ITR filing is required, and there will not be any TDS deduction on redemption. Now, many of you might be wondering that how can, as an NRI, how can you invest in this fund, right? Since this is a GIFT City based fund, it is probably not available to invest in wherever you have been investing, for your Indian mutual funds. So how can you, as an NRI, how can you invest, in this fund? So you can invest in this fund through the Belong app. Belong app has a digital KYC journey through which you can just download the app. You will need to upload your KYC documents such as an Indian passport, residence ID of the country where you are living in. So for example, if it's UAE, then there's Emirates ID. If it is let's say Singapore, so then there's a Singapore ID. So whatever is your current country of residence, any ID to support that, and your latest bank statement to whitelist your bank account from which you will be making investments. Right. So once you have uploaded these documents and filled out some of the basic details, the team will verify your account and make it ready for investments. Post that, you can transfer the money that you want to invest via an international wire transfer from your foreign bank account or even your NRE, NRO account to the app, and through that you can then make the investment in the fund. What are some of the risks involved in investing in this fund, or in general any inbound mutual fund based in GIFT City, and what are some of the things that you have to keep in mind? So first, remember that most of these funds, in order to take the tax advantage, are structured as feeder fund or fund of funds. So just see what the expense ratio is, because fees will be charged at 2 levels, and just see what is the total expense ratio. So for example, in Tata's case, they have come up with a total combined expense ratio not exceeding 1.75%. So that is something to keep in mind, because any expense ratio can potentially reduce your return. So be mindful of that. Then finally, you are investing in India's growth story. So while the fund NAV is in dollars, while you are investing in dollars, when the fund further invests in India, they will be converting those dollars to INR, right? And anyway, if you are investing in India, at some level, you will be taking on the currency depreciation risk, the INR depreciation risk. So again, something to be kept in mind. And as we have always said that diversification is something that one should always look at in terms of currencies, in terms of geographies. There's no point in putting all your eggs in one basket. So definitely invest in India, but also have some investments that are outside India to balance out the currency risk. As I said, this fund is not open to US, Canada, NRI, so they will have to wait for some more time in order for investment opportunities for them to come up in Gift City. And we'll probably do another session on that as and when such opportunities are available. And again, this is a new ecosystem that is building up. Currently, there is only one such inbound retail fund. There are a few more lined up for the next 3 to 4 months. But currently, because of this limited choice, there is less choice available to NRIs to invest through this route. So while it's a developing ecosystem, but just something to keep in mind. I want to finally just recap all the benefits that are available to NRIs. Either because it is Gift City based or because of this fund in particular. So first of all, you can invest in this fund to get access to India's growth story without having to go through your NRE, NRO and FEMA hassles, right? Gift City is completely offshore under FEMA, so there are no repatriability restrictions. You can send in whatever money, you can invest any amount of money, and you can take out any amount of money at short notice without having to deal with any regular banking compliance and all that happens on the India side. So that is one big benefit that comes in Gift City. The other big benefit is because this fund is structured as a feeder fund, a fund of fund, there is no capital gains tax, no TDS for this fund. So these are two very big benefits that NRIs have while investing through Gift City. Gift City is fully regulated by the Indian government through the regulator called as IFSCA. So you get the similar safeguards that you have, which have definitely stood the test of time, throughout. Another advantage is that in Gift City now NRIs can do digital KYC. Again, something that is not as easily done on the India side. India still for a lot of products requires paperwork or a visit to India and all of that. But in Gift City, there is a provision of digital KYC that has recently come. So that also makes life simpler for NRIs when they are, when they want to invest in Gift City based investment products. So yeah, that's all for today. I hope this was useful, and happy to take any questions. Feel free to put that in comments, and you can reach out to us at Belong through our social media handles, or you can download our app and check out all the Gift City based products for NRIs. Thank you very much.